Ladies and gentlemen, if you own gold or silver, stop what you're doing and listen carefully because the next move you make could determine whether your wealth survives the next wave of economic chaos or gets wiped out by government policies you have no control over. You see, most people don't understand this, but the US dollar is not what it used to be. The printing presses are running at full speed. The Federal Reserve keeps telling us inflation is transitory, but the reality is it's eroding your purchasing power every single day. If you think your savings are safe in cash, think again. That's why gold and silver exist. They are the ultimate hedge against currency devaluation. Ladies and gentlemen, let's be honest. Most people have no idea what's happening to their money right now. They wake up every morning, check their bank balance, and feel a false sense of security, thinking that those numbers in their account represent real wealth. But the truth is your dollars are being eaten alive slowly, steadily, invisibly by the very government you trust to manage the economy. Every time the Federal Reserve prints more money, every time Congress runs another deficit, every time the so-called experts reassure you that inflation is under control, the value of your currency shrinks. And yet most people refuse to confront the reality: fiat money. Paper money is not real wealth. It is a claim on wealth. And that claim is only as good as the system that backs it. Right now, that system is crumbling. We are living in an era of unprecedented monetary expansion. The Fed has been pumping trillions into the financial system over the past decade. And yet somehow the narrative remains that this is temporary, that inflation is transitory. Let me tell you, inflation is never transitory. When you're printing money out of thin air, every dollar that is created dilutes the value of every existing dollar. It's economic dilution, plain and simple. And the people who feel it the least are those at the very top, the insiders, the banks, the government contractors, while ordinary savers, workers, and retirees see their purchasing power erode quietly over time. You look at your paycheck and you see the same number as last year. But the reality is that number buys less and less. Your grocery bill goes up. Your gas bill goes up. The cost of rent, utilities, and health care are all climbing higher. And yet we are told everything is fine, that the economy is strong. But it's not strong. It's inflated. It's propped up by the illusion of liquidity and the manipulation of markets. And as long as the dollar remains the world's reserve currency, we are lulled into a false sense of security. But make no mistake, this is a fragile house of cards. Most people don't realize how dangerous this is because they think inflation only shows up as higher prices in stores. But it's far more insidious than that. Inflation erodes your wealth silently. It punishes savers. It encourages reckless spending and borrowing, and it destroys the ability of people to plan for the future. The dollar you save today will be worth far less tomorrow, not because the market crashed, but because the currency itself lost value. And the longer this goes on, the more catastrophic the consequences will be when the system finally corrects. This isn't just theory, it's history. Look at every country that has engaged in massive money printing and fiscal irresponsibility. Weimar Germany, Zimbabwe, Venezuela. They all started with the belief that their currency was stable, that inflation was under control, that the central bank knew what it was doing. But when you print money without restraint, you ultimately destroy confidence in that currency. People stop trusting it. They stop wanting to hold it. And once that happens, there's no stopping the collapse in purchasing power. Right now, the signals are everywhere. If you know where to look. Gold and silver, the assets people have historically relied on to protect wealth, have been rising quietly for years. And yet the mainstream media barely pays attention. Why? Because it's inconvenient to acknowledge that fiat money is failing. The government wants you to feel secure so that you continue spending and borrowing, so that debt levels continue to climb, so that the illusion of prosperity persists. But make no mistake, every dollar spent now is a dollar devalued for tomorrow. And here's the crucial point. Owning gold and silver isn't just about chasing profits. It's about preserving value in a world where money itself is being debased. When the dollar loses its purchasing power, your savings, your retirement accounts, even your paycheck all lose value. Gold and silver don't. They are timeless, tangible assets that represent real wealth, not paper promises. They are insurance against the reckless fiscal and monetary policies of governments that think they can print their way to prosperity. So the next time you see headlines declaring inflation is under control or that the economy is recovering, ask yourself this: recovering for whom? Certainly not for the people whose money buys less every week. Certainly not for those who worked hard to save and now find that their nest egg cannot keep up with the cost of living. The reality is, as long as the government continues to create money, inflation will continue to erode your purchasing power. And when the eventual crisis hits, and it won't be gradual. It will be sudden. It will be dramatic. Those who fail to recognize the warning signs, those who stayed in cash, will be the ones left holding the bag. This is not fear-mongering. It's a warning based on decades of economic history, real-world data, and a sober understanding of how monetary systems work. Fiat currency is a gamble. It is a confidence game. And right now, the system is relying on your ignorance, your complacency, and your blind faith that the government can fix what it has already broken. But you don't have to be a victim. Understanding inflation, understanding the devaluation of your currency, and taking proactive steps to protect your wealth. These are the decisions that separate those who preserve their standard of living from those who watch it collapse. At the end of the day, you need to face the truth. Your dollars are losing value and the system is rigged against the saver. The only way to protect yourself is with assets that cannot be devalued by printing presses. Assets that have maintained value for centuries. Assets like gold and silver. And if you act now before the next wave of inflation hits, you can safeguard your wealth and secure your financial future. But waiting, doing nothing, or trusting that the system will somehow correct itself, that's the path to financial ruin. When it comes to owning gold and silver, it's not enough to just buy it and hope for the best. Too many people think of these metals as a casual investment, a passive hedge, or some kind of set-it-and-forget-it asset. That couldn't be further from the truth. Owning precious metals without a strategy is like owning a lifeboat without knowing how to steer it. You may survive the storm, but only by luck. Timing, understanding market cycles, and knowing when to act are everything. And make no mistake, the markets are never patient. They don't care about your intentions, your emotions, or your ignorance. The market responds to fundamentals, and if you don't understand them, you're going to get caught flat-footed. Let me make one thing perfectly clear. Gold and silver are not just commodities to trade for profit. They are insurance. They are a hedge against systemic risk, against currency collapse, and against the erosion of purchasing power. But just like any form of insurance, you have to know when to use it and how to manage it. Buying at the wrong time or selling out of panic can be just as damaging as not having any at all. Timing the market may seem impossible to some, but it's not about guessing the exact bottom or the perfect top. It's about understanding the trends, the economic signals, and the forces that drive these metals over the long term. Let's start with the fundamentals. Gold and silver prices don't move randomly. They respond to interest rates, inflation expectations, currency values, government debt, and global political uncertainty. When central banks are printing money, debt levels are skyrocketing and the dollar is weakening. Gold and silver should naturally rise. Yet in the short term, markets can be irrational. Prices can be suppressed by paper trading, futures markets, or central bank interventions. That's why you need to separate short-term noise from long-term trends. If you panic over every price dip or jump, you will make mistakes that could cost you dearly. A true precious metals strategy requires patience, discipline, and a clear-eyed understanding of the macroeconomic environment. The first principle of market timing in precious metals is recognizing the relationship between fiat currency and tangible assets. When currencies are strong and interest rates are rising, precious metals can stagnate or even decline. Investors may flock to stocks, bonds, or real estate thinking they offer better returns. But when currencies weaken, inflation accelerates, or governments increase spending beyond control. Gold and silver shine? Those who understand this relationship position themselves ahead of the crowd. They buy when others are complacent, hold through volatility, and sell only when the fundamentals suggest a shift in the economic landscape. Next, it's critical to understand that silver and gold do not always move in lockstep. Silver is more volatile. It has industrial demand, speculative interest, and tends to amplify trends. Gold is more stable, more reliable, as a long-term store of value. A smart strategy recognizes these differences. You may allocate a larger portion to gold for stability while using silver to leverage opportunity when the market becomes excessively fearful or euphoric. Ignoring these nuances is a mistake many investors make. They treat precious metals as one homogeneous asset and fail to exploit the strategic advantages of each. Another key point in timing is recognizing the danger of emotional trading. Investors often buy at the peak because they see headlines of gold or silver surging, or they sell at the bottom out of fear when the price dips. Both behaviors are fatal to long-term wealth preservation. The market does not reward impulsivity. It rewards knowledge, preparation, and discipline. You must be willing to hold when the market is down, understanding that volatility is the price you pay for insurance against a collapsing currency. Those who panic and sell are often the same people who fail to benefit when the metals inevitably rise in value as the system weakens further. Precious metal strategy is also about scale and timing across multiple moves. You don't dump all your resources into gold or silver at once. You stagger purchases, accumulating over time, especially during periods of price weakness. This method smooths out volatility, reduces risk, and positions you to take advantage of sudden surges when the market reacts to macroeconomic shocks. Similarly, selling should be strategic, not emotional. Rarely should you sell because of short-term gains. The real goal is wealth preservation and protection against catastrophic monetary events. Every sale should be evaluated against the potential for future risk to your purchasing power, not just the paper profit you see on your statement. The geopolitical landscape cannot be ignored either. Precious metals respond to uncertainty. Whether it's war trade tensions or domestic political instability, while stocks may soar on government stimulus or temporary optimism, gold and silver act as the ultimate hedge. Those who understand this act before panic sets in. They anticipate the market's reaction, not merely react to it. This anticipatory approach is the difference between preserving wealth and watching it evaporate in a crisis. Finally, let me be blunt. If you own gold and silver and are not thinking strategically, you're leaving your wealth to chance. Precious metals are not just investments. They are lifelines in a world where money is being debased and financial systems are increasingly unstable. Understanding market timing, recognizing the signals in the economy, and acting with discipline is what separates those who survive economic turmoil from those who lose everything. You need to treat gold and silver as the core of your financial armor, not as a gamble or a side hobby. Remember, the opportunity to protect your wealth is finite. The longer you wait, the higher the stakes become. Markets will not wait for you to get comfortable. Governments will not pause their reckless spending because you are unsure of what to do. And when the next crisis hits, those who understand timing, strategy, and the true role of precious metals will be the ones who emerge intact, while the unprepared will be left scrambling, watching their paper wealth dissolve. Precious metals are not just a refuge. They are your ticket to financial survival if and only if you approach them with intelligence, patience, and strategy. Let's talk about debt. Government debt, to be precise. And make no mistake, this is not just numbers on a spreadsheet. This is real money that you and I are on the hook for. The United States, along with much of the developed world, has embraced fiscal irresponsibility on a scale that is unprecedented in history. Politicians promise prosperity. Voters demand spending. And somehow magically the deficits grow without anyone holding anyone accountable. But let me tell you, there is no magic in money creation. There is no free lunch. Every dollar borrowed, every program financed with debt. And every stimulus check that gets printed has a real cost. And that cost is eventually passed to the people. Most Americans don't realize it, but the national debt is not just a number. It's a ticking time bomb. Right now, it's convenient to ignore because interest rates are low. The government can borrow billions every day at rock bottom rates. And the media tells us everything is fine. But this is a temporary illusion. Debt doesn't disappear. It accumulates. Compound interest is relentless. And when rates inevitably rise, which they will, servicing that debt will become a massive drain on the economy. Suddenly taxes go up, government spending is constrained, and your standard of living suffers. Not because of some market crash, but because the government has borrowed too much and spent recklessly. What's worse is that this debt doesn't just sit quietly. It has consequences for the value of your money. When the government prints more to finance spending, it devalues the currency. Every new dollar added to the system dilutes the purchasing power of the dollars you already hold. You may not feel it immediately, but over time, your savings, your investments, and even your paycheck buy less and less. And when debt is financed by the central bank, as it often is, the consequences are magnified. Inflation accelerates, interest rates are manipulated, and the financial system becomes increasingly fragile. Those who don't understand this are the ones who end up losing the most. The scale of fiscal irresponsibility we're seeing today is staggering. Governments no longer view debt as a problem. They view it as a tool to buy votes, to finance programs, and to create the illusion of economic growth. But real growth does not come from debt. Real growth comes from productivity, innovation, and savings. When a country relies on debt to fund consumption rather than investment, it borrows from the future to pay for the present. And when the future arrives, the bill comes due. and it is much larger than anyone expected. Debt also distorts market investors seeing government borrowing as risk-free pile into bonds at low yields. This suppresses interest rates, artificially encourages more borrowing, and inflates asset prices. Stocks, real estate, and other financial assets rise, giving the illusion of wealth. But this is not genuine wealth creation. It's the result of cheap credit and manipulated markets. Eventually, when reality asserts itself, those asset prices are at risk and ordinary investors get caught in the correction. Debt doesn't just burden the government. It burdens the entire economy, and ultimately it burdens every saver. And let's not forget about the generational impact. Debt is being passed on to future generations. Children born today inherit a massive financial obligation, one that will shape their economic opportunities and their standard of living. They will have to pay higher taxes, endure higher inflation, or watch the currency weaken. All because those in power chose to spend beyond their means. Fiscal irresponsibility is not just a policy choice. It is a moral failure. It undermines the future for immediate gratification, and the consequences will be severe. This reckless borrowing also limits the government's ability to respond when a real crisis hits. When debt levels are already astronomical, every new emergency becomes harder to finance. Stimulus measures, bailouts, and economic interventions are no longer simple solutions. They add to the mountain of debt and exacerbate the problem. We've seen this play out repeatedly. Governments promise solutions to every crisis without acknowledging that they are borrowing against the future, not creating real wealth. And when the market eventually reacts, the consequences are devastating, often manifesting as inflation, currency devaluation, or financial instability. One of the most dangerous aspects of government debt is the illusion of control. Politicians want you to believe that they can manage the economy, that deficits don't matter, and that printing money is harmless. But the truth is there is no infinite capacity to borrow or print. Eventually, the confidence of creditors and the public will be tested. If confidence erodes, interest rates spike, the currency collapses, and the debt that once seemed manageable becomes unserviceable. This is not speculation. It is economic reality. History is full of examples where governments ignored fiscal responsibility until it was too late. For anyone holding wealth today, this is a critical warning. Debt and fiscal irresponsibility are not abstract concepts. They are forces that erode purchasing power and threaten financial security. Your savings, your retirement accounts, and even your lifestyle are exposed to the consequences of reckless government behavior. Precious metals such as gold and silver are the tools that have historically protected wealth against this kind of systemic risk. They are not immune to short-term fluctuations, but over the long term, they preserve purchasing power when paper currency fails. The message is simple. The government's debt is out of control. Spending is unsustainable and the consequences are coming. Ignoring this reality does not protect you. It exposes you. Those who fail to recognize the danger will watch their wealth diminish, their standard of living decline, and their purchasing power vanish. But those who understand the risks, who act to preserve their wealth and tangible assets, have a chance to survive and even thrive, while others are caught off guard. In a world dominated by debt and fiscal irresponsibility, knowledge and preparation are the only real defenses. When we talk about wealth, most people immediately think of income, investments, and the accumulation of assets. But true wealth is something far deeper. It's the ability to maintain purchasing power, security, and financial independence over decades, regardless of what governments, central banks, or markets do. Too many people confuse numbers on a statement with real wealth, and that's a critical mistake. Your bank account, your brokerage balance, even your retirement portfolio can look healthy on paper, but if the currency those numbers are denominated in is losing value, your apparent wealth is an illusion. And that illusion is exactly what the system wants you to believe. We live in a world where money is constantly being devalued. Every year, inflation quietly erodes what you own. Every time the government borrows more, spends more, or prints more, the purchasing power of your money diminishes. And yet most people do nothing about it. They trust that the system is stable, that their savings are safe, and that long-term planning in cash or standard financial products will preserve their wealth. But this is a dangerous delusion. True wealth preservation requires a fundamental understanding of what holds value over time. And it is not paper money. It is not government bonds. It is not stocks that depend on a manipulated system. Real wealth is tangible, scarce, and universally recognized. That is why gold and silver have been used as stores of value for thousands of years. Long-term wealth preservation is not about chasing short-term gains or reacting to market hype. It is about strategy, discipline, and foresight. It is about understanding that the world is inherently unstable, that governments are fiscally reckless, and that markets are manipulated. If you ignore these realities, you will be vulnerable to inflation, currency devaluation, and financial crisis. Those who understand them, however, position themselves to survive, to maintain their standard of living, and to protect the legacy they intend to leave for their families. A key part of preserving wealth is diversification, but not the kind of diversification the mainstream media preaches. It's not about holding a mix of stocks and bonds and assuming the system will work in your favor. That's paper wealth, and it is all vulnerable to the same forces that threaten the currency itself. True diversification includes tangible assets that have intrinsic value. Gold, silver, real estate, and strategic locations and other forms of wealth that cannot be printed, manipulated, or destroyed by government policy. These are the assets that survive crisis, maintain purchasing power, and allow you to navigate the storms of economic instability. Timing also matters, but it is secondary to understanding fundamentals. Markets fluctuate, prices rise and fall, and fear and greed dominate short-term behavior. But long-term wealth preservation is about looking beyond the noise and preparing for the inevitable realities, currency debasement, fiscal irresponsibility, inflation, and economic cycles. It is about positioning yourself so that when others panic, you are not only protected, but you have the flexibility to act strategically. Those who wait too long, who rely on government assurances or short-term market optimism, will find themselves scrambling to preserve their standard of living when reality asserts itself. Education is another critical element. Too many people trust financial advisors, pundits, or conventional wisdom without understanding the underlying mechanics of the economy. True preservation requires knowledge of how money, credit, and government policy interact and how these forces impact your savings. It requires skepticism, critical thinking, and the willingness to question assumptions. Only those who understand the system can anticipate its failures and protect themselves accordingly. Blind faith in the system is one of the greatest risks to long-term wealth. The consequences of ignoring wealth preservation are severe. When inflation accelerates, when currencies weaken, when governments print money to cover debt, the middle class is the first to feel it. Savings accounts lose value, bonds yield negative real returns, and even investments that once seemed safe are exposed. Those who fail to act watch as decades of hard work are eroded, their purchasing power diminished, and their financial security jeopardized. Wealth isn't just about accumulation. It's about survival through economic upheaval. Conversely, those who take steps to preserve wealth through tangible assets gain protection and flexibility. Gold and silver, for example, have historically maintained value through wars, depressions, and financial crises. They are insurance against the unpredictability of central bank policies and government spending. Real estate properly selected and managed provides tangible income, generating value and liquidity, and real assets allows investors to act when opportunities arise rather than being trapped in paper instruments that lose value during a crisis. Finally, long-term wealth preservation is about mindset. It is about recognizing that the rules of the game have changed. Governments no longer operate with fiscal discipline. Central banks no longer adhere to sound monetary policy. Markets are increasingly distorted by artificial interventions. The world is unpredictable, and those who assume stability are inviting disaster. Preservation requires vigilance, patience, and a willingness to make decisions based on principle and reality rather than convention and comfort. Ultimately, preserving wealth is not just about surviving. It's about thriving in an environment where most people will see their purchasing power decline, their savings eroded, and their financial future compromised. It's about understanding that your wealth is not measured in dollars, bonds, or points on a screen. It is measured in what those assets can buy in the real world and in how well they withstand the pressures of inflation, fiscal irresponsibility, and economic instability. Those who act wisely now will not only survive, but maintain their independence, security, and the ability to leave a legacy for future generations. Those who wait, who ignore reality, will face the painful consequences of unpreparedness. Wealth preservation is not optional. It is essential. It is not a hobby, a convenience, or a secondary consideration. It is the foundation of financial freedom. And if you take the time to understand the principles, act decisively, and focus on tangible, enduring assets, you can protect your wealth through whatever storms the economy, the government, or the markets may bring. So before you make your next move, ask yourself, are you prepared for a world where paper money loses its power overnight? Or are you ready to protect your wealth with something real, something that has stood the test of centuries? If you own gold or silver, it's time to take a hard look at the situation, educate yourself, and act decisively. Because when the next wave hits, those who ignored the signs will be left wishing they had listened. And those who did will be the ones who sleep well at night, knowing their wealth is truly safe. Remember, in times like these, gold and silver aren't just investments, they're survival.